Welcome to the Tech Talks Daily Podcast, where you can learn and be inspired by real-world examples of how technology is transforming businesses and reshaping industries in a language everyone can understand. Here is your host, Neil C. Hughes.
Welcome back to the Tech Talks Daily Podcast. Now, one of the things I'm becoming increasingly aware of is that our world is much smaller than we all often think. For example, today I have Mark Selcow, partner at Costanoa, coming onto the podcast, who has been an investor in companies such as LivelyHSA and Quizlet. And as soon as I mention the word Quizlet, many of you will know that they've been on the podcast several times. And I don't want to reveal any details at the moment, but let's just say there is a link between today's guest and the CEO at Quizlet. It is a small world, but I wouldn't like to paint it, as my granddad would say. But I do need to stop saying small world, or that Disney song will end up inside my head, because it is the most evilest of earworms out there. So we better change the subject quickly, or I could infect the entire world with it. So, moving swiftly on, as a former founder of 2 startups and now investor, Mark has some unique insights he's going to share with us today about the world of technology. And he has been on both sides of the fence because he was a serial entrepreneur and operator who led organisations in the enterprise software and consumer internet sectors. He co-founded and served as president of 2 companies, Merced and BabyCenter. And BabyCenter was sold to Johnson & Johnson in 2001. But enough from me. Let me beam your ears all the way to San Francisco so we can get Mark onto the podcast to share his story and how raising VC money, combined with his previous experience as a founder, has impacted his investment style and process. So a massive warm welcome to the show. Can you tell the listeners a little about who you are and what you do?
Of course. Thanks for having me. My name is Mark Elko, and I'm a general partner at a venture capital firm here in Northern California called Costanoa Ventures. So I'm a VC tech investor, and my job is to invest at seed and Series A in business software companies that change the way the world of work gets done. And my job is to find those companies and buy shares in them and work tirelessly to help them grow and try to build great companies. And that's how we do our job, and that's how we return capital to the investors who've given us money. That's what I do.
I think most people listening will be aware of the world of venture capitalism, especially around the tech startup scene, but there will be a lot of people listening hearing about Costanoa Ventures for the first time. So just to get everyone listening up to speed with the kind of work that you're doing, can you tell me more about how you're actually helping these early stage investors, backing tenacious and thoughtful founders who are actually changing how business gets done?
Yeah, Costanoa is a young firm. We were founded in 2012 by Greg Sands, who had spent 13 or 14 years as a managing director at an established, highly respected old line firm. And he wanted to do it a new way and focus on the early stage, and he founded Costanoa. At his last firm, Greg invested in the second company that I co-founded, and I worked with him for a decade. And I knew that if I were to switch from being an operator and a founder to being an investor, that Costanoa was the place for me. And here's why, and this is the answer to your question. We are really engaged and really helpful investors. Most of us have backgrounds working inside real companies. We haven't just spent our careers as investors. Greg was the first product manager at Netscape. I co-founded 2 companies. We know what it's like, the lonely, hard, volatile world of being an entrepreneur, because we've been there, number one. Number 2, we've built our firm not just with an investing team and all that comes with that, but with an operating team of late career, really experienced people who've held executive roles in marketing and sales and talent and people operations, which is rare for people who invest at the early stages to provide that level of resource and support. So the most direct answer to the question is we do a lot of things the way other people do. We look for breakthrough technologies and really innovative founders who are creating new markets and doing things that haven't been done before. But what's special about us is how hands-on and really operationally helpful we've built our firm to be.
And I'm glad you mentioned the phrase being hands-on there. One of the things I'm incredibly curious about, and a question I've got to ask you is, how has raising VC money previously as a founder, how has that impacted your investment style and process? Because I would imagine it would completely transform your thinking.
Yeah. I'll give you a really small example, but it's meaningful. It used to really chafe me as a founder when a venture capitalist would call and say, I really want to meet with you. I want to learn about your company. I want you to take my money. And then I, as a founder, would say, okay, let's talk. And then the VC would say, when can you come over and meet me at my office? Yeah. It's a little thing, but it always bothered me. And so, there's a bigger point above the smaller point. So obviously, I don't do that. If I'm reaching out to meet with someone, I say, when can I meet you at your place? And of course, I want to show them respect. I want to acknowledge that they're probably working hard, and I'm the one who asked for the meeting. But it's also there's something symbolic, which is it's your company. You're the one who's taken the risk. You're leaving everything on the field to build it, and we're operating in service of companies, and this is how we're going to behave. So that's the small example, and then the symbolic bigger point. But it really gets to what you're asking. I try to be deeply respectful. I try to see the world from their perspective. And I try to show them in every way that that's what we're trying to do. Which doesn't mean we don't take governance seriously as a firm. It doesn't mean I don't have hard conversations, because I take that fiduciary responsibility as an investor and board member seriously. But the little things can matter. And another little thing I'll just use as an example, it always used to bother me when VCs would talk about the companies they've invested in as their companies. Like, well, my company did this and my company. Well, it's not your company. It's the founder's company and the management team and the employees who are building it every day. You happen to supply them with capital. So that's something I try never to do.
Excellent. And like you say, it is a small example, but it's a huge impact as well, especially from a startup founder's point of view, who've been through all those experiences that you've mentioned there, and they just want to be listened to and respected as a founder of a company. But something else that I wanted to ask you is why is it that you guys prefer to invest in enterprise technology versus consumer? Is that a conscious decision? It
is. So we do make exceptions from time to time. As you're aware, we're investors in Quizlet, where we led the Series A along with another great firm, Union Square Ventures, and I was the interim CEO at Quizlet. That's a consumer company, but most of what we do is enterprise. And the best answer I can give you, I co-founded two companies before I became an investor, and one was a consumer company, BabyCenter, which became the largest service for pregnant women and new moms and dads in the Web 1.0 era. And the second, where we acquired the company in the UK that you and I have chatted about, was called Merced Systems, which was software related to improving performance of high turnover workforces and call centers and financial back offices. It was classic enterprise analytics technology. I learned really valuable things about the difference between the two. Consumer businesses can be so dramatic and breakthrough and exciting, but they come with a huge amount of demand risk. You just don't know how the consumer is going to respond. What I love, and we love it as a firm about enterprise technology, is the depth of customer research that you can do and the deep understanding of these markets that are enduring and existing. So we feel like when we're thinking from first principles and trying to understand how technology can bring change into a market, we feel we can have a deeper level of understanding and take a little bit less risk, because we're already taking a lot with enterprise. And I'll just put a bow around this example by saying when things go well in an enterprise company, they usually go well for the reasons we thought they would. And we like that. That makes us feel like we can bring our knowledge, our expertise, and our sweat equity. And in consumer, there's just a little more luck involved. And that just doesn't suit what we're trying to do. We'd like to provide the magnitude of returns with a little less volatility. So that's why we do it.
And in your exception, you did mention Quizlet, and we've had Matthew Glotzback on the show a couple of times now. It's always great value. Did you know him at all?
So I recruited him to be the CEO at Quizlet and did not know him before that encounter. So we led the Series A in Quizlet. And as your listeners may know, Quizlet is the leader in learning tech. It's a really significant company with tens of millions of users, and it's growing and thriving. We made the investment was much smaller. This might highlight who we are as a firm. We, the company, for a range of reasons, needed a fair amount of operating support, including some leadership on a temporary basis. We led the investment, and I became the interim CEO of Quizlet. I had the experience to do it, and my firm is willing. And I think there are plenty of investment firms who wouldn't have chosen to make that investment and wouldn't wanted to, or might not have had the capability to provide that kind of leadership. But we did at Costanoa, and I played that role. So I got to know the company deeply, and that helped me understand the profile of the person that we needed. And it was in that search that we found Matt. And without going on at length about why he's the right fit, 4 years have gone by, and we had a board meeting just yesterday. He's just knocked it out of the park. It's been incredibly successful run for Matt, and he and I work together frequently and are really close.
Wow, talk about a small world, isn't it?
Yeah, it can be for sure in the worlds that we operate in. Although I will tell you, I think the world might be getting a little less small in one respect. It used to be that there were pockets where many of the most successful early stage tech companies were formed. Northern California, Israel, Boston, Seattle, Austin, Texas. And that is changing, and it's changing at a dramatic rate. We're finding exciting companies to invest in East London, in Sydney and Melbourne, all over Canada. We have 2 Swiss investments. I'm spending more time on the East Coast of the U.S. The enterprise and infrastructure opportunities in New York City are substantial, and that it used to not be where New York City was strong in its tech scene. And we love that trend. And as a firm and personally, I love just going where the innovation is. And the more that can be spread beyond Northern California and Silicon Valley, the better it is. And so we support that trend, and we're excited by it.
Absolutely. And I must admit, because I record these podcasts every single day and I get to speak with people all over the world, and that's a trend that I've noticed as well. It's not just Silicon Valley or California now. It is just about every country you can imagine. Technology is transforming it. It's incredible to see. And you did mention tracking trends there. So can you tell me more about the interesting industries and trends that you are tracking, and also the areas where technology is actually helping workers become better and more productive?
Yeah. Well, our priority areas are business applications that are enabled by the transformation of data strategies like AI and ML. So application layer. Number 2 is the infrastructure that supports this explosion in data. So data pipelines and data stack and DevOps and the rise of the developer and massive needs in cybersecurity. So infrastructure would be 2. FinTech and the application of technology to financial transactions and processes is a really exciting trend, and one that I'm very involved in. And then supporting technology inside the world of autonomy and communications is another area. That's what we do as a firm. And the areas that I'm really focused on within business applications are workforce, and in particular applications in customer experience and sales and marketing, FinTech, and in health IT. And I just see exciting set of companies being created in those areas. And just to focus on workforce, since that's one that you highlighted, there are really meaningful trends around gig work and 1099 work, around mobile and distributed work, around the different preferences and work habits of millennials, and the different habits and work practices in different geographies. And we think that's created an opportunity for new systems of work. And I'll give an example. Originally a Brisbane, Australia founded company that's now got offices in San Francisco and in London and of course around Australia, and that's called Skedulo. And they're riding the trend of mobile workers. So think of all of the people on their mobile phones who are working full-time or part-time to deliver services out of their car or out of a van. There is, apart from service and repair, the cable company with the parts in the back, there are so many new industries that need a core system to operate. And, people installing and inspecting solar systems and home healthcare aides and home infusion nurses and catering companies and pool cleaning services and gardeners and landscapers, and the list goes on and on and on. We see an exciting opportunity there, and, we're really, really pleased with the progress of that one company. And then since we brought up Quizlet, which has an adult and professional and vocational learning component to it, many people know it as a place where students in high school or at university would go. But people are studying for professional credentials like medical boards and law review and, specialty certifications like, becoming a realtor. And, self-study and asynchronous learning is a massive trend. And we're excited about that part of Quizlet's business. And just to give you one last example, a company where we led the Series A few years ago is Springboard. And Springboard is basically an online university for people building digital and technical careers. So if you are an analyst inside BT and you want to learn Python and R because you want to be a data scientist, but you can't quit your job, and the idea of going to grad school is not feasible, you can take a course at Springboard, become a data scientist or an AI practitioner. You get an industry mentor who might work at a company like Google or Airbnb. And if you're admitted and the admissions bar is high, it comes with a job placement guarantee. And Springboard is just thriving because so many people want to advance into dream careers in technology, but there's been a lot of friction. And they've done it in a way that's practical, in a way that employers love. And their success rate is incredibly high, in the high 90s. And the salary increases dwarf the amount that people pay to join the course. So these are just some examples in the future of work that we're really excited about.
And you mentioned FinTech there, and another area I keep hearing more and more about is InsurTech. So I'm curious, how are you seeing technology reinventing the worlds of the finance world and the insurance markets? Because they're very traditional industries, but there seems to be a huge momentum gathering here, isn't there?
Yeah, and that's why we've made it a priority. We completely agree with your observation. The traditional processes that relate to the flow of money and financial technologies are being made more efficient and faster, with cost being driven out through the application of technology. And it's just transforming the capital markets and the banking markets and the lending markets. And, payment rails and infrastructure are being improved in a way that's much more suitable to end customers. So, many people have traditionally worked with banks and legacy providers, and it's been okay, but everybody wants it faster and cheaper, and that's where FinTech comes in. And just to pick on insurance, insurance is very close to my heart. I grew up in Hartford, Connecticut, which Americans will know is the seat of the U.S. insurance industry. Everybody on the block, every dad on the block, in those days it was mostly men, worked in a big insurance company, and I grew up around it, even though I never really worked in the industry. But I feel really close to the changes that are happening there. And the opportunities are many. Data strategies, we've already hinted on with AI and ML, that can fundamentally bring massive amounts of data that change actuarial work and underwriting work. And reveal where an insurance company can take more risk or is taking too much risk in a way that's nimble and more accurate. Of course, technology can change customer service and claims processes. We've all had the experience with a fender bender where you feel like, wait, why is it taking so long? And why is it so expensive? And can't I just get a check for my damage and go to whatever body shop I want to go to? And then distribution. The average age of an insurance broker in the United States is in the 60s. There are new distribution opportunities. People are buying insurance direct, or if they're buying it through traditional channels, It can be made faster at lower error rates. So we see opportunities in insurance on sales and distribution, on the pricing and the packaging of products through the underwriting process and through core servicing and the infrastructure underneath all of that. And that's why we're so motivated and spending so much time in insurance.
Excellent. And a quick look on Instagram makes it look like that everybody wants to be an entrepreneur now. And we've already talked about how we're both speaking with companies in every corner of the world. But why is it you think that more people are interested and willing to be an entrepreneur today versus when, for example, you started BabyCenter all those years ago?
Yeah, I have this conversation often because entrepreneurs I meet today who are generally younger than I was when I started BabyCenter marvel at how the culture used to be. So that was in the 90s. I was in my early 30s. And when we went out to raise money, we were told almost universally, you're too young. You need to get more scar tissue, get a little more gray hair. We don't think you're fit to lead till you're maybe, I don't know, in your 40s. The best thing I can say here is that the culture's changed. Yeah. And, maybe an example would be, we are seeing so much innovation in companies being formed in Australia, which is why we've made 4 investments there. And I'll speak to Australian entrepreneurs and say, hey, what's going on? And they'll say, 10 years ago, 20 years ago, we just wouldn't have done it. And, one theory is the Atlassian effect, the massively successful, tech company, the guys who created Jira and have done so much more, who showed a whole community of young technologists in Australia, hey, it can be done. And it can be done in a way that is aligned with your values and, culturally consistent with how you want to be as a person. I mean, those guys are just so impressive. So I wonder if there's an effect of just my peers are doing it, people I admire are doing it, whereas in a past generation, I look at my graduating class from Stanford Business School and almost nobody was starting a company. Our peers felt it was the right thing to do, to go get some experience and work at a big company. And I just think the culture's changed. And, I meet so many entrepreneurs who are college age today. The founder of Quizlet was 15 when he started the company. And it's a massive success. So all I can say is I just think the environment's different and I wish I understood why. It's just a trend.
And as someone that has co-founded and served as president at not one, but 2 companies, is there any advice that you'd pass down to maybe a startup founder listening that's at the beginning of their startup journey? Are there any pearls of wisdom that you could possibly share?
Yeah, I would say 2 things come to mind. One would be ruthlessly focused on the few things that you really have to do with every unit of time, say a month or quarter or your first year. I see great entrepreneurs bring intense focus. With the limited team you have, the limited cash you might have, you'll never be as resource constrained. And the world will never see you as such a risky vendor, or partner. So you have to pick the assets that you need to build. And I'll use that language deliberately. What's the asset you need to build? Usually it's product. And within that, what component of the product do you need to be? And I say that because too often out of the natural fear and anxiety that comes from having quit a perfectly good job and put yourself in the hole financially and expose yourself to your whole community by starting a company, it can be an impulsive time in people's lives where they just jump around to whatever seems like it's going to help them. And I think that can be the wrong approach. The right approach is just be diligent and build and build and build, but just build in small chunks. So that would be piece of feedback number 1. Number 2 would be surround yourself with a few people who've done it before, who know you and your style, and hopefully know your market and the problem you're working on. And lean on those people really hard. Ask more of them than you feel you can comfortably. It may not seem this way, but they're getting a ton out of your energy and what you're doing too. So surround yourself with people who are going to give you the advice, but also the emotional support to get through that scary period where you got to get something built. And those are the 2 pieces of advice I would give people.
And looking towards the future, is there anything in particular that excites you about where technology is heading right now and what that means for startups and indeed businesses all over the world?
I'll tell you, the most profound trend right now for me is the application of AI and the massive amounts of data. And, I worked in the late 80s in the biotech industry where the application of recombinant DNA felt really dramatic, and it was. And I started my first company in 1996 when the internet had just emerged, and that was profound. And I feel like the techniques, the massive amounts of data that's being generated in every second of every minute of every day, and the techniques for wrangling and harnessing that data feels to me equally profound as those two. So my job and our firm's job is to look for the applications inside work and businesses where those techniques can be applied to really matter.
And for anybody that would like to find out more information about the kind of work that you're doing there, can you just remind them of where to find you online? And equally, if they are left with more questions, of course, the best way of reaching out to your team.
Great. We are Costanoa Ventures. That's Costanoa Ventures. And our website is costanoavc.com. And anybody who wants to write to me, feel free to send me an email directly. And I'm Mark, M-A-R-K, at costanoavc.com. And I would love to hear from you, and I'll do my best to respond and be helpful.
Well, thank you so much for taking the time to come and chat with me today. There's so much of today's conversation I'm going to remember for a long time, and I'm always fascinated by what shapes you on your career and what makes you want to do things differently. And that small but impactful example that you mentioned right at the beginning there, where you were constantly told as a founder, come and meet me at my place, and that small little tweak that you made to right that wrong is a story that I'll always remember as well. But more than anything, just thank you for taking the time to talk with me today.
Well, thank you for having me. I've really enjoyed it.
So many great topics there from Mark, such as the one I particularly enjoyed, of course, was how raising VC money previously as a founder has actually impacted his investment style and process, and also for sharing the reasons why they invest in enterprise technology versus consumer and all those interesting industries and trends that they're tracking today. Ultimately, areas where technology is helping workers become better and more adaptive performers. Because that's the bottom line, isn't it? We're all hearing these regular tech buzzwords. No one wants to look under the hood and see how they work. Well, the kind of problems that we're actually solving. And that's one of the reasons I'm so passionate about recording this podcast. So a big thank you to Mark for coming on the podcast today. I will reveal something that he told me off the recording, and that is that although he's in the US, he has spent a lot of time here in the UK and is a Spurs fan. So fellow Spurs fans, give him a pat on the back. Arsenal, Chelsea fans, probably better stay away. But seriously though, let me know everything that you thought about today's conversation. If there's anything you thought that either of us missed and you'd like to add to the conversation, or share your story, email me, techblogwriter@outlook.com. My website's techblogwriter.co.uk, where you'll find today's story and indeed 1,100 other interviews. And if you want to follow me on social media, you can get me on LinkedIn, Twitter and Instagram, all at Neil C. Hughes. All I ask is don't just hit follow. Send me a quick hello. Tell me you listen to the podcast. Because meaningfully connecting, that's what it should be all about. But it's time to get off my virtual soapbox now. I'll be back tomorrow with another guest. But a big thank you for listening. And until next time, don't be a stranger.
Thank you for listening to the Tech Talks Daily Podcast with Neil C. Hughes. Remember, technology works best when it brings people together.